Now, all business accounts fall into one of 5 categories. They're either asset accounts, liability accounts, equity accounts, revenue account, or expense accounts. Now, to begin with, take a look at the information from Murray, Inc. and classify each as either asset, liability, equity, revenue, or expenses. Well, the first one you see is cash. Well, cash is an asset. Now, retained earnings. Retained earnings are the earnings a corporation earns, profit that the corporation earns, and keeps it. It belongs to the shareholder, and they keep it in an account called retained earnings. So that is shareholders' equity. Cost of goods sold. Cost of the items that the company has sold to the customers. That is an expense. Salary and wages expense, obviously, an expense. Prepaid insurance. Now, this is an asset account. Now, when you buy an insurance policy, you pay for a year in advance. You haven't used it up. When you use up insurance, that's insurance expense. But when you prepay the insurance for a year, what you have is an asset, which you will use up over the course of the year. So prepaid insurance is an asset. Inventory. Inventory is what a business buys in to resell to the retailers or the company, to the general public, sorry. These companies are called retailers. They have inventory. Now, inventory is a catch-all word for everything that is available for sale within a business. So it is an asset until it is sold. When it is sold, it becomes the cost of goods sold, which is an expense. Accounts receivable. When the business earns revenue, it either receives money or it receives a promise from somebody that they will pay in the future. That is called an accounts receivable, and it is asset. Okay, put it over here, asset. Sales revenue, well, that's a revenue account. Income tax payable. The key word is payable. This is a liability. Accounts payable. That too is a liability. Now, business buys items often from the same suppliers. They have an account with those suppliers. And when they purchase from the suppliers, they generally will pay at the end of the month. So that's a liability account. Revenue, service revenue, and interest expense. Now to continue on, here's some more accounts. Again, very similar to the ones above. Retained earnings, that's a shareholder's equity account. Cost of goods sold, that's an expense. Selling and admin, expense. Accounts payable. I have suppliers to my business and I buy from them on account, so accounts payable, I pay them later, is a liability. Common stock, that is what is sold to the shareholders by the corporation. So that is shareholders' equity. Income tax expense, expense. Long-term debt, now the key word there is debt, that is a liability. Inventories, as we saw up above, an asset. Net sales, now don't get confused with net. Now a company who sells to customers a product, the customers can return that product. So net sales is what they've sold to everybody minus what has been returned. So this is a revenue account. Cash, assets. Notes payable. Now the key thing is payable, it's a liability. Now a note is a formal financial document. You see, if I have an account with my supplier and I am unable to pay my supplier, the supplier can't do anything. We had a business arrangement that I broke. It's not, I didn't break any laws. It's just a business agreement to pay him, and I didn't pay him. But if I gave him a note and said, I promise to pay you by the first of the year so much money, well, you see, and I sign it, that's a legal document. And if I do not pay on that note, then the supplier or the person who I wrote the note to can take that to court, and I would be charged for not failing to keep up my side of a contract. So a note is a formal financial statement. It's like a check, if you will. Interest expense, expense, other expenses, expense. So there you have some of the accounts for which you must become familiar. And as we go on, there will be adding new accounts. Now, each time these accounts that we add, you say to yourself, what is this account? An asset account, a liability account, an equity account, a revenue account, or an expense account? It cannot be anything else. Okay.